All right, welcome to another episode of the Aspiring VC. Your host, Matt Snow with Mass Ventures here. I have the pleasure of speaking to Brooke Pollack of Hutt Capital today. But before we get into anything venture or tech related, let's talk coffee. Starbucks or Dunkin', what's your pick?
Well, I live in the Northwest, so I clearly have to choose Starbucks, and plus it's just better. So there's that as well. And yeah, I used to live on the East Coast, and Dunkin's everywhere, and I'm not a huge fan. I only did it if I was desperate. So
Well, it's a tough start. I am a big Dunkin' guy, but I will admit the quality has kind of gone down a little bit recently. So I kind of understand why some people go to the Starbucks side.
yeah, well, it's a good thing they took donuts out of the name because their donuts weren't any good. So it's for the best.
I guess so. But let's for listeners, let's do just a little summary. Explain who you are and what is Hutt Capital and how did you kind of get into the position that you're in right now?
Yeah, certainly. So I'm the founder and managing partner of Hutt Capital. The quick high level on Hutt Capital is we're a blockchain venture fund of funds platform. So, we're not an early stage venture fund. Our fund as a fund of funds invests in early stage blockchain VC funds, closed end funds focused on that space. So we provide our investors with kind of a one-stop shop to get broad exposure to the top blockchain and crypto startups, rather than building our own early stage portfolio of 20 or 25 companies. And then, we also invest directly in growth stage companies focused in the blockchain and crypto space, specifically ones that have been backed by one of our managers. We track their portfolios in a ton of detail and provides us a very unique set of data and intel that we use to do growth stage direct investing as well. So we do all that, through kind of a single fund. And we're pretty young firm, so we're on fund one right now. We got started a couple years ago, so we're a startup firm, I guess, from that perspective. And my background before this, and I can get into more detail if it's of interest, but I spent a decade in the private markets world, working for leading global investment firms, working across fund, secondary, and direct investing. So I've spent a lot of my career doing exactly what I do now, but in the broader private markets, work some of the time in venture specifically. Spent a lot of time looking at stuff in the buyout world and growth equity and all sorts of other private strategies. So I've become increasingly focused over my career to be solely focused on blockchain and crypto these days.
That's awesome, man. And for any of the listeners that are kind of new to understanding the fund of funds concept, particularly how it applies in venture, do you want to just give them like a high level breakdown of like what that means and how it's working?
Yeah, certainly. So, I mean, the idea of a fund of funds, the benefit which it provides, just generally speaking, is it allows investors to get access to top funds that they may not have access to. It also offers them the ability to utilize the expertise of fund of funds to select managers and get access to markets which are particularly difficult to build expertise and relationships. So, where you see most success with fund of funds is in areas like venture capital, blockchain and crypto, U.S. investors investing in Asia, other kind of, hard to access areas where the expertise and relationships are very unique and, also very important. As everyone knows, if you're not investing in, let's say the top quartile or better venture funds, you just basically shouldn't be doing it. So, fund of funds allows investors to get access to those funds, effectively outsource that expertise without having to develop those relationships and expertise in-house. For a lot of folks too, they have relatively small teams. So if you think of your average endowment or pension, I mean, they only have maybe a handful of folks that are focused on the private markets, probably less. I mean, some have teams totally of a few folks, just covering the entirety of their investments. So, the time and effort it takes to build these deep relationships, whether it's in venture or blockchain and crypto, or, like in Asia, for example, given what I mentioned earlier, it's just really hard for them to do that. So, it makes a lot of sense for, for some of these firms to basically outsource that exposure to experts through a fund of funds.
What's really interesting to me here is I think, at a high level, it's like, venture as an asset class is a little bit younger than hedge funds, right? Because the hedge funds start in like the 50s and venture starts in like, I guess early or mid or late 70s. And then, fund of funds in venture probably comes later than fund of funds in hedge fund world. But then also, crypto is an entirely new space basically. And so you're kind of like the cutting edge wave of bringing fund of funds into venture into crypto, right?
Yeah, we were definitely on the early side. We got started late 2018, and yeah, I mean it's a double-edged sword, I guess. Well, I guess part good, part bad. It's not a double-edged sword technically. We started fundraising the depth of crypto winter, so that took a little longer, than if we started fundraising today, of course. But at the same time, having that early start, while probably made it tougher initially, the relationships we've built over the past 4 years are just completely invaluable for the future of Hutt Capital. And while it made it harder initially, it's significantly better for us over the long term, having been early. And yeah, we were the, I guess, first dedicated blockchain venture fund of funds platform. And there are some certain advantages to being a first mover.
Absolutely. And when you look back, even maybe as far back as like kind of first getting out of college, what is it that pulled you to private markets? What pulled you to venture? And then I guess eventually what brought you into crypto?
Yeah. So going back to college, so I helped to start an investment group at Oregon State University, which is where I graduated from. And I've always been a very like quantitative, numbers driven person. So initially I was attracted to investing just because of that piece of it. Just kind of the quantitative analysis and data, and going through company financials and building models and stuff like that. And I found that pretty interesting. And I've also just always enjoyed, like, I don't know, playing games and puzzles. And I felt like investing in a way is basically just doing games and puzzles for a living with higher stakes in a certain way. And so I was just always drawn to that piece of it, I guess. Early in my career, I had zero interest in technology at all, to be honest. And so when I was in school, I interned with a small buyout firm here in Portland that was doing kind of small leverage buyouts, for kind of profitable manufacturing, kind of traditional businesses of that nature. So that was kind of my introduction to the private markets. And then after school, honestly, I just wanted to find a job in investing. Being at Oregon State, it's not like we were heavily recruited by all the top all the top firms. You're kind of left to go figure it out yourself. So I was very fortunate to find a job with a firm called CTC Consulting here in Portland. And at the time, I wanted to stay in Portland. At the time, so I was looking kind of locally, and CTC is a investment consulting firm for family offices. So I mean, I don't know what it is today in terms of numbers and that kind of stuff. But at the time, we had about 90 clients, about 30 billion advisory assets, and the firm did everything. But the team that I started working for helped these families to invest in private funds as an LP. So we covered the whole private markets world. And it was just a really great way to learn the space and understand, okay, well, what are the different strategies in private markets? And just learn about all the different areas and kind of figure out what was interesting, and just meet with these fund managers and just really smart, interesting people constantly who are managing these funds. So yeah, it was a really good experience. And after that, I was just kind of hooked to the private markets. But that was kind of how I got involved initially.
Yeah, I mean, it's easily to get addicted to it. And I guess at this point, between that experience, Greenspring and now, I mean, how many fund decks do you think you've seen at this point?
Oh God. Yeah, I mean, it's been, let's see, since when I started CTC, it's been 12 and a half years. I probably see, I don't know, let's see, you say I see a new one every other day. So we'll call it, I don't know, 180 times 12 and a half. So what would that be? Well, over 2,000 decks. Yeah, lots of decks.
Yeah, that's
Prepared me well for making my own, I guess. Although I'm definitely no design expert.
yeah, man, it's quite the volume. I mean, what you know at this point, how has all this experience impacted, what you're looking for when you're evaluating someone else's fund? And I think this is unique because I don't think it's come up in any of the other episodes, and I think this is something that is truly one of those insider perspectives that very few people, could offer. So just kind of curious the patterns and the kind of particular things you really want to see when someone's laying out their strategy.
Yeah, certainly. I think similar to being an early stage investor, there's definitely a level of pattern recognition that you develop over time in terms of, you know, what, what breeds success and kind of what you're looking for, which, is just kind of something that comes with time. But and at the end of the day, like if you're investing in venture, I mean, it's a very competitive market, and there's lots of funds out there. There are plenty of funds to choose from, and if you're a venture fund, it's like, okay, if I'm in this extremely competitive market, how do I differentiate myself? Both to LPs and founders. Obviously, both are quite important to the success of the business. I'm much more worried about how they differentiate themselves to founders. I'll make my own decision on whether they're differentiated from my perspective. But it's okay. Well, if you're competing constantly with all these other venture funds, why are they choosing you instead of your competitors? Why are founders coming to you with top deal flow? What's your competitive advantage? How are you viewed by the markets? Just kind of really digging into why they see the best deal flow, why top founders want to work with them. Certainly digging into the thesis and what's the strategy is also important. That's kind of like higher level stuff. That's kind of also very important, but a little less in the weeds. And then when you're looking at venture funds, looking through the track record is important. And why is important? I mean, really trying to figure out how they've done historically, and then determine the repeatability of that. So some folks have an okay track record, but you might expect actually you're going to be significantly more successful in the future for whatever reasons. Other folks have a great track record, and you might think it's completely unrepeatable and like totally due to luck for whatever reason. So really digging in and figuring out how they generate returns and where they come from, and if that's repeatable going forward. Obviously that's more an easier thing to do for mature funds versus emerging funds. On the emerging side, it's much more qualitative in terms of understanding their network and deal flow and differentiation, and that's going to to lead to success versus having like a long track record that you can do that analysis of.
And like as a thematic investor, doing fund of funds applied to crypto VC, you feel like, I imagine, like, do you have to have like a kind of view on the broader market and where it's headed? And I guess, do you balance like going after the name brand kind of old guard funds that are in the space, like A16Z with their crypto arm, versus like a Pantera or a Blockchain or Castle Island or someone else?
Yeah. So I guess on the second point, I mean, brands can be good for deal flow, right? So if you're a brand name fund, clearly you're going to be well known. That might lead to more deal flow, et cetera. But I certainly don't take it into account purely for the sake of, I don't know, having a brand name fund in the portfolio. My sole focus is maximize return for LPs, and if that's working with brand name funds, great. And if it's not working with brand name funds, then so be it. So clearly it has an impact on on their ability to be successful. The ability to build a strong brand typically coincides with the ability to generate higher quality deal flow, but then you actually have to follow through on that in terms of being a valuable partner, selecting the right companies, et cetera. But it certainly can work to their advantage. There's also a factor where the more brand name funds tend to be larger, and just from like a traditional venture math perspective, a smaller fund, all else equal, will outperform a larger fund. They can invest smaller amounts and have them be very material for those funds, and especially in the blockchain and crypto space. A lot of these companies and protocols don't raise as much capital as like traditional like SaaS companies, for example, which tend to burn through quite a bit of capital. So I think it's even more of focus because of the nature of financing in this space. So, but overall, I expect well, I guess we have a balance between brand name and emerging funds. But it's not a predetermined thing. It's just kind of based on our criteria of each individual fund.
And I know that you've gone about building a pretty strong like advisory board. You've pulled on some venture partners. So how have you thought on your side about how you can kind of assemble this kind of like network and strategic, value add on your platform?
Yeah, I mean, when I was first getting started, it was really valuable to have the quality of advisors that we have around the table because I go out there as a first time fund, kind of starting from scratch, like, oh, who's this guy? And it helps to show that other people are around the table and involved to are high quality folks and who are people we're very fortunate to have involved. And also just it's been great to have them involved in the past couple of years. And especially as a single GP fund, having a great advisory board. More recently we added a wonderful venture partner, Sandra Familette, and having all those people involved is especially important being a single GP, because I have all these people that we can rope in whenever needed, and just kind of formal parts of the team from that perspective who I can rope into things and get their opinion, versus people who aren't a part of the firm who I can do the same thing with, but just a little different. So yeah, I mean that's a great experience. I've been very fortunate to have the folks that we have involved. And yeah, I definitely think if you're like a first time GP going out and doing it on your own, it does help to just kind of show that those people trust you and believe in what you're doing and want to be involved. And so it's that evolves over time, obviously, to actually providing significant value as an advisor, right, which is the more important part of it. But yeah, it's definitely something I found value in as a first time GP from that perspective as well.
Totally. And on this like first time GP note, I don't know how many of the listeners are aware, but when you're building a fund, it's still like you're basically building a startup, right? So at one level, you're like building your startup company, and then you're also doing your investments. How do you think about the balance of those two in your role and what it's been like to, bootstrap this thing off the ground?
Yeah, I mean it's a lot of work, and yeah, I mean there's a lot more involved in starting a fund besides purely just doing investing and going out and pitching people on on the fund. So yeah, I mean it really is running a business in a way that I think like when you're coming from the LP side, especially when you're younger in your career, you don't really fully appreciate. Um, and yeah, I mean it's been a really good experience. And uh, you know I'm not sure what exactly how I would say my time is split between, let's say, investing, fundraising, and operations. Definitely the two biggest pieces are investing and fundraising. The operational piece is a smaller part of what we do. We have all that outsourced through partners, which has been a great experience for us. And I mean, for those who are considering it, you can outsource back office and finance and admin and all that kind of stuff through third parties who, do this for a living and are wonderful. So, that's a great, great cheat code for new funds. You don't have to go out and actually hire a CFO and all that kind of stuff. But yeah, I mean, when we got going, it's like, all right, well, we don't have any capital yet. We're raising our fund. Okay, well, how do we finance the business? While we're going, and what's our budget, and what does the management fee look like, and what does that cover from a team perspective for fund one, and just like a lot of the operational stuff that every startup thinks about, that we just our startup just happens to be an investment management focused startup in a way. So yeah, that whole business building piece of it is a lot more important than I think most folks realize before kind of getting into it.
Yeah, and it sounds like it's getting better in the the amount of it that you can hire groups to assist with. But I think there's probably a lot more that is still maybe hands-on now that maybe 5-10 years from now it'll just get more and more streamlined. What do you think might improve in the future that would make it kind of easier to start something from scratch?
Yeah, I mean, so I think the biggest, well, I don't know if it's the big, not one of the big issues with starting a new fund is that most people who start funds are able to either one, raise money pretty quickly because, they're a partner at a big fund for 10 years or whatever. So they're kind of, taking LPs with them, and, they don't really have to worry about that startup period because they can raise the fund and get into business quickly. Or, have the personal capital to self-finance for a while and not really worry about it while they get going. But, if you're just a person who doesn't have that level of personal capital and you want to start a fund, then what do you do? And I wasn't really as aware of this when I was on the LP side, but GPs very, very commonly, first-time funds, first-time GPs will raise operating capital by selling part of the GP. And that was, seeing funds doing that and kind of understanding how that process worked was very interesting, because first-time funds don't really advertise that they're doing that. So, it's kind of interesting understanding what that process looked like and all that kind of stuff. And yeah, I think for, if you want to be like, start your own VC fund, understanding like how you finance a new fund, who you can go to for financing for those situations and stuff like that, just like any other startup, I think is just under discussed in the industry overall, at least from what I've seen, and maybe understood. So, just knowing that there are options for people of that nature, I think having broader awareness of that would be good, so that we can have, a broader subset of people, both, socially and economically, starting funds and bringing different perspectives into the space.
Definitely. And when you think about, there's kind of changing Regulation A and Reg CF fundings. There is kind of just the explosion of the crypto sector as a whole. You have all these services that are emerging to kind of support emerging managers and maybe entire dedicated platforms and maybe even accelerators going forward. What do you think the space could look like in terms of how decentralized the whole thing could get? I mean, even from the fund of funds down to the actual funds themselves. And
yeah, it's a good question. I mean, we're definitely moving in the direction of, broader access for investors to startups. And, if you look at it from a crypto native perspective, the ability for anybody to invest in, in these networks and protocols from a very early stage in a way which, clearly is not the case with traditional equity. And I do think, it's only going to open up. I think the crypto side of it and the concept of, a token being the primary value creation mechanism is going to be increasingly common, which will then, kind of naturally open up investing for a broader audience. And likewise, I think on the equity side, we're only moving towards a world where, I guess regulations are more lax for the average person to be investing in this. And frankly, platforms like Republic, for example, are going to become more prominent, that kind of facilitate that. Because, if random person out there wants to go find a startup to invest in, like, it's hard to do that. You need to have a certain network, or you need to partner with a platform who effectively outsource, you can outsource that to help you find startups that are interesting. So, you also need those platforms to exist in order to, facilitate that for the masses. If you're a venture fund, you don't need that, but for the 99.9% of other people who don't have that network, those types of platforms are very helpful. And likewise, I think the crypto side, I mean, a lot of the stuff is going to end up tokenized. Could end up as a tokenized security if you're talking about traditional equity, but even that will make it more liquid and accessible and just kind of more easily tradable, which will be a great step forward. And you're seeing some pretty creative structures around like tokenized securities that aren't just purely ownership in a company, but provide access to different types of cash flows and stuff like that, which further provide unique opportunities and access to to the public. So yeah, I mean, I'm pretty excited about where that's heading. I know there's some pretty cool stuff happening in the crypto space around democratizing investment. And if you think about the crypto side, anything that's on chain. So if you're purely dealing with crypto assets, you can have completely on-chain funds where I could invest in an on-chain fund that only invests in crypto, solely using my basically my MetaMask wallet. And just like if you kind of take that to its logical conclusion, just the ability to invest in what like a hedge fund, for example, anyone could start being able to do that. Who has internet access. Likewise, in the crypto space, you're starting to see a lot more around synthetic securities, which unfortunately in the US, they don't take super kindly to that. And hopefully that will change over time. But if you're outside the US, likewise, the access to, to securities and to other types of investments, is going to be significantly broader than what it has been historically because of, those types of products.
And do you think that as some of these like early crypto guys and gals find their wealth like really, increasing it with the protocols, do you think that a lot of them are going to be looking at that? I mean, like, okay, I'm really concentrated here, and like maybe I want some exposure to venture. And would you expect, some of those individuals, in addition to some of these institutional LPs, to kind of want to get access maybe to Hutt Capital to have exposure to that ecosystem in a different way?
Yeah, and those are obviously two very different crowds. I think in the crypto space, there's some of those folks are they're just going to hold what they hold forever, and they whether it goes to a zillion or to zero, they're gonna hold. Others have done quite well, and it's like, all right, well, I'm going to take I guess what someone might traditionally call a more practical approach, and diversify a bit. Whether that's something like Hutt Capital, which provides just broad diversification, into upcoming startups and protocols, or outside of blockchain crypto completely, and invest in traditional venture funds and other types of private funds and other types of assets. So you are definitely seeing people who have accrued a lot of wealth look to diversify, but not as much as people who have made a lot of wealth in other areas. People in this space tend to, hold on to their assets more tightly, I guess, than someone who maybe, I don't know, maybe it's actually not that different from, like someone who builds a business and has very concentrated wealth in that business and is kind of hesitant to give it up at the end of the day. So I think you see kind of a similar thing, and then eventually they'll do more diversifying. But on the institutional LP side, I mean, yeah, we're seeing a lot more interest from traditional institutions in blockchain VC funds. I mean, to be honest, like just in the past month, there seems to be something that's changed where there's just been a significant pickup from institutions who have been tracking the space for a while, have been getting educated for a while, and suddenly are just much more comfortable deploying or considering deploying, or just becoming much more active. So yeah, we're seeing a big pickup across the ecosystem and interest from traditional institutions.
And I think so much has happened in particular the past 3 to 6 months that maybe, certain market cap of Bitcoin and Ethereum is being normalized, and certain involvement from the legacy financial and general tech world. I guess just the amount of public, firms putting this on their balance sheets starts to normalize everything, and the traction's it feels like it's compounding every day.
Yeah, absolutely. And, it's easy to say, oh, price goes up and then that draws interest, which certainly is true. But yeah, I mean, this is so different than 2017, for example. I mean, just the fundamental progress that's happened is completely night and day. If you look at the actual traction and usage, and on the company side, revenue growth and generation and customer base, and just everything is seeing such like incredible traction, over the past year. So it's, the usage and demand is there in a way which it just hasn't been in prior bull cycles. So it's much more sustainable and broad based, and actually supported by fundamentals, which we've seen in the past, which makes it way more exciting than just seeing the price go up based on retail speculation, which typically ends badly. So so yeah, that's been great to see. And you've had some of these subsectors emerge, areas like DeFi and NFTs more recently, and then just huge growth in other subsectors, areas like crypto derivatives and stuff like that. I mean, you've seen such huge growth in so many subsectors. It's been incredibly fun to watch.
And I have to ask, how do you try and stay on top of it? I feel like, especially for you, because every fund in the world in the space wants to find you. Then you're trying to understand what's going on with Bitcoin, Ethereum, and DeFi and NFTs, and it's just like that's a lot, man.
Yeah, I mean, besides not sleeping, I don't know. I've definitely, learned to be much more efficient with my time over the past couple of years, and there's managing all that, and making sure that I'm spending my time efficiently and on things that time should be spent on, I guess. So just learning and being good at time management is a very big part of it. But yeah, I mean, there's so much going on at this point. It's like trying to be an expert and everything is just impossible at this point. And there's new protocols and startups just popping up, and at a pretty significant rate at this point. And yeah, I mean, trying to keep track of that is impossible. We're very fortunate because we have a look through at all these underlying funds and what they're investing in. We can, we have a pretty interesting bird's eye view where a lot of that is kind of done for us. So we don't have to go out and track every protocol, understand what's going on. So, that's a pretty efficient way also to have that curated for us in terms of what's interesting and what's worth us knowing about. But yeah, a lot of reading, a lot of listening to podcasts, just talking to managers, talking to, companies and protocols, and just doing our best to filter everything that's going on and figure out what's interesting.
I guess that's the argument for the fund of funds model that you're offering too. It's like, unless you have the time to do this 24/7, you're not going to do better than these managers. Just pick get into all the best ones and have them do what you're not going to be able to do on, as an individual.
Yeah, I mean, as this space grows, I think frankly our value proposition also grows. There's more funds, there's more high quality funds. It just makes it harder and harder to sort through what's going on in the space, and pick a couple funds that are going to be your coverage. The market's so broad at this point that there's different funds are becoming much more focused than they were in the past, and kind of figuring out what they're good at, and kind of having niches that they focus on. So yeah, it's really just hard to get that holistic exposure. I mean, you could make a bunch of commitments internally, but most folks don't have the relationship and network and the setup to do that properly. So I mean, really, without a fund of funds, it's just difficult to get that. Without a fund of funds, it's difficult to get that holistic exposure these days. And I expect that to continue being more and more the case. And frankly, the increased institutional interest that I mentioned earlier, that means that access is getting harder and harder as well, which likewise kind of plays into our hand from a value proposition standpoint, and makes the relationships we have increasingly important going forward. So
no, absolutely, you're set up in a good spot to be basically de facto market leader.
Appreciate that.
Yeah. Transitioning back to the traditional venture world, a big focus of the podcast is kids that and young professionals that want to break into VC, people in college. What do you advise to them, whether it's crypto or traditional VC that they want to break into, that they should think about?
Yeah, I mean, looking back, I mean, the most valuable thing you can build is, I guess two things. One is just expertise, figuring out what interests you and just, get really deep in it. But two is your network, and, the people that you build relationships over the years. I mean, for example, starting my own fund, it's like, okay, well, who's in my network that I can go to, and then, find introductions from, et cetera, kind of when you're at the starting point, and just, get to know as many people as you possibly can, build relationships with as many people as you possibly can, reach out to people in the industry and just ask them questions, and, they're not all going to answer you or take your call or whatever, but, talk to as many as you possibly can and build relationships with as many people as possibly can, and, keep them posted on your progress, career wise, and just like, maintain those relationships as much as you practically can. And, over time, those relationships compound and, become, kind of very important part of, your value over time in terms of, who and who your network is. So, that's probably something I maybe fully didn't appreciate early in my career, that I certainly do now. Yeah, that's probably the single biggest thing I would say.
Yeah, and to go a little meta here, I will say, so we shared the Greenspring connection, but we didn't work together at the same time. And so I found you, I think I just found you on LinkedIn or something, and just reached out, and we've talked for a while. But that's the type of thing that anyone listening to this, like, you got to start doing that. Like, anyone who's an alumni from your school that's in an important position in the industry that you want to be in or adjacent, you got to take those opportunities and and always be reaching out to those people.
Yeah, absolutely. Yeah, and when you're younger, yeah, especially when you're still in school, people tend to be more open to taking your call. Like, oh, I'm a college student, and I went to your school. It's like, oh, sure, I'll take 15 or 30 minutes to chat. And once you're out of school, they may or may not be as willing in certain cases, or once you have a career, things get a little more complicated. But yeah, take advantage of being a student, and finding people who are if possible from your alma mater. Obviously, when I was at Oregon State, we didn't have like this massive massive VC alma mater to go to, but utilize that as much as possible, and then just reach out to other folks who aren't in your alma mater, and just try to get their attention, and just try to get to know them, and see who will talk to you. Can't hurt to ask.
Yeah, exactly. If you're good, we can move into some of these rapid fire questions here.
Sure, let's do it.
All right, first one: who's been one of your most important mentors? And if you remember like a quote or like an action that they still sticks in mind today from something they kind of helped you with.
Yeah, it's a good question. So I'll go a couple different ways with this. I mean, professionally, Hunter Somerville, who's one of the GPs at Greenspring, was my mentor while I was there, and has been very influential on me professionally, and just has helped me to I guess build myself in over, I guess, since I started at Greenspring, which was back in 2014. So yeah, it definitely has been big influence on me professionally, and just frankly taking example from him, as well as on an everyday basis. Kind of formal mentorship aside, likewise, my two bosses from my first job at CTC, JB Hayes and Rod Larson. I mean, they've been we still keep close in touch, and they've been great mentors as I've gone along with my career. I guess one other, one other thing that stuck in my mind. So one of my music teachers, back when I was in like grade school and high school, just kind of influential in general, but in particular, had a saying, that he said all the time, which practice what you preach. And for some reason, that's just always stuck in my head. And I think it's, very, very good advice. And, it's just kind of always, stuck in my mind for whatever reason.
Yeah, I think that's awesome, man. And outside of Hutt, what is another VC or fund of funds, either a firm or a particular partner that you really admire?
It's a good question. I won't go the easy route and speak to my former employer Greenspring, which would be very easy to do. But I guess one firm that I've been very impressed by. It's not a blockchain or crypto fund, but is Pioneer Square Ventures up in Seattle. In particular, so it's a startup studio that's developed into a venture fund. So they create their own companies from scratch, and I don't know. I just always found, have found like that approach where you're not just going out and finding deal flow, but you're gonna make your own companies. You're gonna go out, look for gaps, and we're a venture fund, but we're also gonna create our own companies, and then invest in those companies. And just like it's just a very novel approach that took a lot of hard work to sort out, and ambition, and it's way harder to execute on that than it. I mean, it sounds hard, and it's way harder to actually do it. And they've done a great job with it, and they're up in Seattle. I'm in Portland, so it's a relatively local firm, which I is nice as well. But yeah, that's one that stands out that I've been very, very impressed by.
That's awesome. I think very clear value add. Every firm wants to have it, but when you're literally incubating companies at the ground level, that's very clear hands-on support.
Yeah, it's good deal flow.
Okay, so startup wise, what are some of your favorite startups, or alternatively, what are the characteristics of startups that get you excited about a business?
Yeah, I mean, just high level characteristic wise, I mean, it depends if you're looking at earlier growth stage companies. I mean, at the growth stage, by the time companies have 10 million plus of revenue, I mean, it starts to be pretty clear, who is building these really breakout companies. So the sorting through that is, it's still a difficult thing to do, but it's not as hard as like sorting through seed stage companies, for example. So I mean, if you look at really early stage stuff, and one area that I've found particularly interesting, I mentioned it earlier, but is the synthetic security area. So startups like UMA Protocol and Synthetics and Mirror, which they all allow the ability to permissionlessly create synthetic assets in a way which really has never been possible before. And what that does is it opens up the financial systems which have been typically closed by country borders on a global basis. And I don't know, I just find that for whatever reason just incredibly fascinating. And I just think it's going to be hugely impactful over time in terms of really globalizing the financial system. And wherever you live, you should be able to access financial systems of different countries and assets that trade in different countries. And if you're sitting in the middle of nowhere in whatever country, but you have internet access, you should be able to get exposure to the U.S. financial system just like you do here. And yeah, I find that incredibly interesting, and I think it's gonna be hugely impactful over time.
Yeah, I mean, I think you have a great point. And I think I feel like we forget in the West how many people don't have access to Wi-Fi and just clean food and water and just the banking and financial system 24/7 like we do. And so having that built all over the world and taking the rails out of global trade will just be pretty amazing. It's who knows how much efficiency and kind of global trade we can get from breaking down that border there.
Yeah, absolutely.
And earlier, I know you talked about listening to podcasts a lot. And so this last one is just, on the podcast side or books and blogs, what is your favorite stuff to follow to kind of stay up to date on news and, just kind of educate yourself?
Yeah, I mean, I'm deeply immersed in crypto, so everything I read and listen to is, I mean, with some exceptions, but in terms of regular stuff, is all blockchain and crypto related for the most part. And on the podcast side, I think for people who aren't deep in this space, my favorite one is Laura Shin's podcast. She has two, I guess technically, it's Unconfirmed and what's the one called? We'll go with Unconfirmed. That's a great one for people who are trying to learn about the space. There's a bunch of other good ones, but if I had to recommend a single one, that's probably where I'd start. And on the reading side, I mean, there's so much great content out there. I guess the question is finding it. So I subscribe to certain newsletters that I read, very regularly. One from our manager, Castle Island Ventures, which is great. It's done weekly. On the DeFi side, the Defiant is kind of the leading media source there and does a great job. The Block is a dedicated crypto media source, and likewise, read their stuff every day. Same thing for Masari. I subscribe to their newsletter and read their stuff pretty constantly. But yeah, there's so much good free content and research out there. I find a lot of great stuff through Twitter, honestly. I follow investors in the space, and there's a lot of toxicity for sure. But if you follow smart people in the space who are investing and not just purely talking about Bitcoin and stake, then you just get free access to so much information which is just freely shared online, which I that's kind of a specific to blockchain and crypto thing. But for those who are trying to learn about this space and use Twitter, I would take advantage of it.
Yeah, I have to say, if you're trying to break into venture, you got to be on Twitter, but especially anyone who's trying to break into venture and is also interested in crypto, it's the Twitter is the perfect place to just literally see everyone's thoughts in real time. So, it's pretty amazing.
Yeah, it's an interesting place.
Yeah, both good and bad.
Yeah, exactly.
This question took this from Tim Ferriss, but really love this one. What's a purchase of $100 or a couple hundred that has just turned out to be an amazing buy, outsized impact in terms of happiness or utility?
It's a good question.
I've had a lot of people say AirPods. Some people have talked about exercise gear. I in particular have this like little mini guitar amp that's been super useful. That was cheap.
Yeah, it's a it's a really good question. Like honestly, probably just like the tools I've bought for our yard and garden. I love just doing yard work and doing gardening and growing stuff and obviously, I haven't spent a ton of money on that stuff, but just kind of buying some basic tools and stuff related to that, which you know, maybe in the winter isn't so valuable, but for once that starts and for 6 7 months of the year, yeah, I take a lot of pleasure in. So yeah, I'd probably say that if I had to choose something.
Oh, that's cool, man. That's definitely the first in that category, but I like it. I want to make sure that you promote yourself, please. So, where can people find you? Where can they find Hutt Capital? And what are all your kind of media angles?
Yeah, for sure. So, our website's huttcapital.com. You can check us out there. We've done some webinars in the past as well. We've done some writing on Medium, which is medium.com/, I think it's at Hutt Capital, hopefully. I'm on Twitter as is Hutt Capital, BH Pollack, and Hutt Cap specifically. I'm not super active, but I'm on there, I guess. I'm not sure it's a great way to follow me. And if you want to, you can find my contact information publicly. So it's out there.
Awesome. Well, Brooke, know that you've got a lot going on building the business, and I really appreciate your time. And I think this was an awesome episode. So thank you again, man.
Yeah, thanks so much for having me, Matt. This is a pleasure. I appreciate you having me on here, and it was a lot of fun. Thank you.
Of course, man. We'll be in touch soon.
Cool. Take care.
Looking to innovate, invent, and disrupt? We're your partner to fuel your growth. Contact us to learn more.